Happy VA Wednesday. So today we're going to be answering what I was surprised. This is actually one of the most searched questions about VA loans. Is getting a VA loan hard? No. So first things first, if you guys are working with a lender and they're telling you that VA loans are very hard and they're hard to get, I want you to dump them and call me. Step one, we're not even going to play that game, and I'm going to explain why now. So as a lender who does conventional, FHA, USDA, jumbo, right? I do it all. VA, okay? I am going to tell you right now, VA is the easiest one to qualify for. And it's because when you're buying a house, there's three keys. You've got your credit, your income, and your assets, okay? Credit with VA will go as low as $550. If you're looking something like a conventional mortgage, you're gonna be at $620. So VA definitely allows for lower credit scores, okay? So does FHA, but VA as well, okay? And look, it's gonna depend on the lender you're talking to. Some lenders have higher credit score requirements. VA itself actually does not have a credit score requirement. So it is lender by lender. Okay, so what's the next key? Income. Income always plays into debt to income, whether you're getting VA disability or whatever your job is. We're gonna look at your income versus the payment. VA allows a higher debt to income than all of the other loan programs. That's right. With VA, you can have a higher debt to income and still be approved. So generally, if you guys watch this channel, I do a lot of videos about being house poor or having a really high debt to income. It's not generally a good idea. However, if there's income that we're not using because maybe you just started getting commission, or maybe your spouse is not on the loan, but they make really good income. If there's other income we're not considering that contributes to your daily life, then a higher debt to income can be fine. And VA does allow for a higher debt to income than all those other programs, okay? Assets. Well, of all those other programs, VA is 0% down and there's no monthly mortgage insurance. FHA, you're gonna have monthly mortgage insurance no matter what. Conventional, you need to put down 20% or you're gonna have mortgage insurance, or you're gonna have a higher rate because the lender's doing lender paid mortgage insurance. But you're gonna have mortgage insurance. You're also gonna need to put more down, okay? Because this is zero. Right? So zero down, no mortgage insurance. So then someone might go, oh, okay, well, that sounds easy. You're right, Jen. But I heard the VA underwriters are really picky. Guys, they're no different than conventional or FHA. I actually think VA underwriters are more understanding. Like if I'm looking at different files, what will and will not work, I know I have a better chance with a VA file every single day of the week if I can explain the situation that happened. It's super simple. VA wants you guys to get houses. They want to actually let you use the benefit. So the guidelines are pretty flexible. Now look, is it like you can have no income and get a VA loan? No, we've got to show ability to repay. Can it be you haven't paid your bills in 2 years and you want to no, it has to be reasonable. But for instance, if you have a job gap or there's a hiccup or there's something with VA, it is more flexible. Okay, and it's situation by situation, but just as a lender that does all of it, because sometimes people, it's always odd to me, they're like, I don't just do VA. I love VA. VA is a big chunk of my business, but I do all the other loans too. And I'm telling you right now, it's a lot easier to get a VA loan through, period. Okay, so then the next thing I'll hear is, oh, okay, well that all sounds easy. So maybe it's the appraisal. Guys, the VA appraisals are easier. I'm not even kidding. And people who don't understand VA don't get this. VA is the only loan type where the appraiser gives the realtors a heads up if the value is going to come in low and gives them a chance to justify their value. Conventional doesn't do that. Conventional, FHA, USDA, jumbo, they're just going to give an appraisal and be like, yep, it's low. Best of luck. Right? With VA, they're like, hey guys, it looks like it's gonna come in low. Do you have some additional facts to share with us? That's nice. That's actually easier than someone just slamming you with a low appraisal, because at least then they have a chance to fight it back. With the other loan types, can you fight the appraisal? Yeah. Do you have as much success? No, because you can't, it's really tough. So conventional, if I have to fight an appraisal. We have to go to the appraiser, say what's wrong with it. The buyer has to want to do this, all this stuff. And then it's up to the appraiser if they want to change the value or not. Most of the time, they're going to be like, yeah, pound sand. Bye, I don't care, right? Because then in order to even do anything about the value, they don't have like a boss man I can go to and be like, hey, like this isn't cool. Like he's lying or he's wrong or he's missing something, right? No, none of that. VA, you get this heads up, and then if it comes back still low and the realtors really think it's wrong and the buyer thinks it's wrong, we can go to VA. The appraiser has a boss man or boss woman who's gonna look at that appraisal and go, okay, like, yeah, that's realistic or it's not. And it's not like, you know, when you think about like hierarchy and all that, you'd be like, oh, well, they're gonna defend the appraiser. Guys, they work for the borrower. Period. Like they don't work for the appraiser, they don't work for the lender, they don't work for the realtor, they work for the borrower. And what's in the best interest of the borrower? It's going to be buying the house for what it's worth. If the price was too high and it's really not worth that, they're going to come back with that. If they think the appraiser was wrong and the house is worth more, they're going to come back with that. You know, this is way easier than this where I have to be like, hey, appraiser, like you weren't right. And they're like, I was right. And then I'm like, no boss. Okay. So over here, my next thing is I would have to take that appraisal and try to find a deficiency so I could order a whole new one with a new appraisal. That's harder. Okay, the VA appraisal process, way easier, worlds easier. And here's the other thing, to be a VA appraiser, you have to know your stuff. It's not like you get baby appraisers as VA appraisers. Like you have to go through a lot. It's the same thing with the underwriters. A VA underwriter is far more experienced than a conventional underwriter. So it's like with VA, you're getting this wealth of knowledge and expertise, and the guidelines are a lot more flexible. So look, I don't think VA is harder. I know it's not harder. If anyone's telling you it's harder, it's because they don't know what they're talking about. So questions, comments, as always, guys, reach out. I have a calendar. The link's always in everything. I'll post it in the comments too. Hop on, guys. I have Sandy and Alyssa. Their whole job is just to answer questions all day long. Any questions, okay? I actually should, not any, like any loan related, real estate. You know, sometimes they give advice as well. But look, we're here to support you guys, whether guys and gals, whether you're buying a house a year from now, 5 years from now, 10 years from now, 20 years from now, just reach out. We're here to support you. So I hope this video was helpful. And no, VA loans are not hard.